Urgent silver warning, black swan event about to devastate and flip price of silver. A black swan event is unfolding and banks are carrying all the risk. As this unfolds, we're going to see a rush to the safe haven of precious metals. I'm going to break this down and show you the price of silver is about to be flipped after the smoke clears, and I don't want you to be left behind. This is from Bloomberg, and it says, with the notional value of 0 days to expiration contracts tied to the S&P 500 hitting roughly $862 billion, almost 90% of 300 Pulse respondents said they expect the growth to continue. The twist on this is according to Bloomberg, they're about evenly split on whether it will grow steadily or end in calamity. I'm going to explain this in normal English language so you understand how powerful this is and absolutely frightening. First, the market has totally changed. The options market is greater than the equity market. And everyone is rushing into these 0 DTE contracts. This is from Investopedia, and this explains this best. This is from Investopedia. It says, what are 0 days to expiration, these 0 DTE options? A 0 DTE option can be defined as any contract that is being traded on the day it expires. Now, because it's being traded on the day that it expires, the premium is less. Just like you and I dealing with silver and gold, it's all about premiums. This says that the CBOE does not specifically generate option contracts that expire on the same day they are issued. Instead, it issues weekly options with expiration days for each day of the week. With the exception of contracts that expire on Fridays, most of these options are issued 2 to 3 weeks before the expiration date. Options with 1 month or more until expiration continue to be those that expire on Fridays. Regardless of how long ago the contract was issued, the final trading day for any option has one characteristic in common. It has the least amount of premium. So that's why people are so interested in these. And when I say people, I mean retail traders. Everyone is going in on these. Check out how much this has increased. Again, this is from Bloomberg. And this says, equity derivatives with less than 24 hours to expiration, known as 0 DTE, have become one of Wall Street's most popular trades as investors, big and small, seek to navigate uncertainty over the economy and central bank policy. Trading in 0 DTE made up 45% of the total options volume for the S&P 500 last year. 45%. It's about double the level from before the products became widely available in the second quarter of 2022. They're 45% of the market now. I mean, this is just massive. The scale of the boom has stirred controversy. This again is from Bloomberg. There are concerns that the activity in ultra-short dated options may be affecting stock volatility, while research has suggested that retail investors using their money are mostly losing their money on this. A majority of survey contributors showed awareness of the latter risk, with 56% expressing the view that it's too easy to lose money with this tool. Too easy. But the concerns, check this out, the concerns didn't extend to limiting retail access to 0 DTE, with 76% of respondents, almost 2/3 of whom are professional investors, saying it was only fair to keep them easily available. So this is going to continue to roll out. And as this rolls out, what we're going to see is that traders are making more and more risky bets. I mean, it's just bets because it's a 0 DTE. And really the frightening part is that these investors, they buy these 0 DTE options, and banks need to hedge that. That means the banks need to end up being sellers and driving down stocks to zero. As this 0 DTE option rolls out in 2024, we will see this massive disruption drive up uncertainty in the market. And you guessed it, there's your math. Economic disruption, whenever we have disruption in our economy, and add to that consumer uncertainty, that leads to a rally on precious metals. And that is going to push up the price of silver, this silver that I'm holding in my hand. That is up. If you're enjoying this video, by the way, please hit like, please hit subscribe. It really helps so much to get this information out there. This is exactly what's going to push up this price of silver as this continues with the months ahead, because this is a moving train. Nobody's stopping it. I just explained the data to you from Bloomberg. I mean, 76% of respondents, 2/3, say that yes, these are risky trades and most people are losing money, but they still agree that the train should continue forward. So because some people are making money. Clearly, this is all about money. I mean, it says that the data in this article says that it hit roughly $862 billion on these 0 days to expiration contracts. 862 billion. So people are making money, but it's putting pressure on banks to hedge this, and eventually those banks become the sellers, and that's driving and pushing the stocks down to zero. And that's how this happens. That's how this moving train keeps rolling forward, and people feel uncertain. They move to the safe haven of silver, which is absolutely the outcome, and that pushes this price up higher and higher. This is how we get to $35 an ounce. This is how we get to $40 an ounce, $50 an ounce. This is the math that we need to really look closely at.